welcome. You're watching Ask BQ on Bloomberg Quint. I am Agam Akil. Hi, Alex.
Hey, Agam. And I'm Alex Matthew. Well, if you've got questions on equity, then you can send those questions in to us on Facebook, Twitter, YouTube, and WhatsApp. You can also call us on 022-454-04141, or you can mail us on askbq@bloombergquint.com. Just make sure to add the Ask BQ hashtag. Well, it seems like the Fed chair has given the Indian markets an early Christmas present.
Well, certainly, Alex, and it's evident in the moves that we've seen as far as your benchmark indices go, which are both trending higher by as much as 1%. And the Nifty, of course, on expiry is trending above the 10,800 mark. Sensex reclaiming 36,000 as well. The Nifty banking index also advancing in trade with the gains of, well, almost 1% at 26,674. In terms of big gainers and losers, very quickly, the Nifty gainers, we do have the likes of Hindalco, Bajaj Finserv and BPCL leading the gains. And we also have gains in Vedanta, Bajaj Finance and M&M. So it's been a broad-based largely. Let's take a look at some of the losers then. We have weakness in Yes Bank, more weakness in fact. On an intraday basis, it hit and went below the mark of 150. HCL Technologies looking at some weakness after gains that we saw in the entire IT pack yesterday, and ONGC is also declining by around 2%. But on the whole, it's been a good day of trade, save for a handful of IT names because of the strengthening Indian rupee against the US dollar. Was all around, given the fact that we're seeing the Nifty above, well, 10,800, that's a positive, Alex.
In fact, I was going to point out the rupee. Let's also, in fact, address the benchmark 10-year bond, if we can, and pull up where the yields are at, just to complete the story. Currently trading around 7.6%. Again, having lost some of the kind of increase that you'd seen in the yields over the last few months. In fact, second day in which you've seen the yields coming down, currently at 7.6. In fact, let's get our experts in for the day. I believe we have Astha Jain of Securities who's through, and we will soon be joined by Ashish Kelkar of Kiran, Jadhav and Associates, and they're both here to answer all of your questions today. Let's start with a mail query. Ullas Agarwal has written to us. He's holding shares of Jindal Stainless at 140 rupees per share, and Methan Alloys at 600 rupees per share. He's asking if he should hold these stocks or switch to another one. Astha, I won't ask you to stick to these two names. If you think that in the same space there are other stocks that you would rather invest in, you can go ahead and advise him to do that.
First of all, I want to talk about Jindal Stainless. I think he has hold the stock, but the kind of performance this stock is posting, it is not infusing optimism because this is a loss making in the bottom line. So not a real optimism is coming from the stock, and that's why my idea is get out from the stock. Even on the metal space as a whole, we are not so much positive because the way in China and US, their trade war is going on. So it is impacting the metal as a whole. So my idea is to stay away from the metal space for the time being till this whole does settle down about the trade war concerns, and afterwards only invest in the metal. So my idea is for the Jindal Stainless also, I would advise to exit from the stock because I'm not finding any real value in the stock at present moment of time.
Some clarity, maybe, Agam. Over the weekend, in fact, President Xi Jinping expected to have dinner with President Trump, so maybe something could come out from that.
Sure. Right, but we'll move on and take the next one from Gopal Dhoot. His question is that he's bought 8K miles at 92, and should he sell or wait for a higher, or actually, well, this is already around high because he's actually making a significant profit. And his other question is with respect to Motherson Sumi, which he has bought at about 152. Okay, so Astha, if you can take both of them, what should he do with 8K Miles Software, where he has bought it at around 92, and Motherson Sumi, which has been bought at about 150? What is your view on both these?
See, if the investment horizon is a short term, I'm talking about 8K miles right now. So, if the investment horizon is short term, then definitely she can book some profit because right now it is giving good profits to the investor. So, my idea is book some profit, but again, this IT space as a whole is looking good. But the way rupee has appreciated, so we have seen some sort of downfall in the IT space, and that's why my idea is partially book profit in the 8K miles at the present point of time.
Okay. I believe there was also a question on Motherson Sumi, Astha.
If we talk about Motherson Sumi, can I do the cost price?
What was the price at which I think he bought at 152?
Yes, 152.
If we talk about Motherson Sumi, right now the stock is above. If it is above its cost price, then definitely I would like to suggest book some profit because as a whole, my idea is right now I'm not finding this space, automobile space, to be very attractive as we have discussed earlier. Also due to the not so good monsoons as well as NBFC crisis, so all these things are not looking good for the automobile space. So my idea is if the investor is earning some profits, then definitely one should book some profit in the same space.
Okay, let's take a short-term query because I think we have Ashish Kelkar joining us on the phone line. Thanks so much, Ashish, for joining us. We've got a question from Ujjwal Kumar. He's asking for a view on Canfin Homes. He's asking for a short-term view. He's asking for a target and a stop loss that you would advise. It's currently trading around 259, about 0.5% higher.
Good morning. If you look at the Canfin Home, the stock is poised at a very good level. It is trading near a very good support, I could say. The strong support can be seen at around 255, 254 to be very precise. So till the time the stock is above 254, then there is a possibility to get a further bounce back on this particular counter. So the first target which I can see on the chart is around 270 rupees in the next couple of weeks. Currently it is trading at 259. So I would recommend to hold with a strict stop loss of 254 on a closing basis.
Okay, we'll move on to the next one. And next one is a fundamental view on Excel Industries. Let's pull up Excel Industries if it's possible and see what it's doing right now. In the meantime, we can also go to Astha. Astha, do you track Excel Industries? If so, what is your fundamental view on this one? We have Joby Alias, who is interested in a view in this one.
If we talk about Excel Industries, as a disclaimer, I want to say that we have a stock coverage and we have initiated coverage on the stock. If we talk about fundamentals of this company, definitely fundamentals are very strong and they have posted more than 200% growth in their bottom line, and this is a consistent performer. If we talk about their balance sheet also, their balance sheet is quite deleveraged and basically it is into the chemical space. But if I take a technical view also, then I think that the stock is in the sideways movement and this range is 1100 to 1900. So my idea is, because he is interested in buying right now, so wait for some more time, let the stock fall at somewhere around 1400 level. Because of its sideways momentum, we can see such sort of levels also. Then it is a right point to enter into the stock. Because of its sideways trend only, I am asking the investor to enter at a lower level, and then my price target is 1950 for a longer term price.
Okay. I believe, so, you know, I think you pointed this out, Agam, a couple of days back. We get a lot of questions about BEPL, Bhansali Engineering.
That's right.
It seems to be a stock that a lot of people favor. Is currently trading about 4.2%. If you can pull up the weekly chart, because I believe there has been a significant correction in the recent past that actually has been pointed out. It's about 8.7% lower in the last 7 days or so. In fact, we've got Deepak Senthil Kumar, who's asking for a short-term view on Bhansali Engineering. He is holding 10,000 shares, 115. So he's making sizable losses here. We've also got another who's asking for a longer-term fundamental view on Bhansali Engineering. So we'll do both since this is quite a popular stock. Ashish, first to you. On the charts, we've got an investor who's gotten in at 115. What advice would you give him first? And then we'll go to Astha.
Okay. If we look at the chart, it is continuously making low tops and lower bottoms. And the next bottom is very near, and that is 69. If this bottom is taken off, then the next target which I can see on the chart is around 51 odd level. So if someone wants to hold on with a strict stop loss at 69 on a weekly closing basis, And if it is taken off, then the target would be 51. On the higher side, the stock has to clear a mark of 79.5 if it has to give us a bounce back. So if it crosses 79.5, then there will be definitely a bounce back. And in that case, an investor can get a exit at around 98 odd levels. So hold with a strict stop loss of 69 as of now.
Okay, Astha, what's the view here? We've got investors asking, or we've got viewers asking why the stock is correcting. I don't know if you will have an answer to that. But on the fundamentals, what do you see?
This stock is correcting because if you see the financial performance since last 2 quarters, the company is not able to post growth in their financials, and that's why we have seen such a sharp correction. Because although in this market mid-cap space is not performing well, and if a stock is showing some sort of a degrowth, then definitely markets are not liking it, and that's why we have seen a sharp fall. My idea is because he's want a longer term view on the stock, so my idea is only if the longer term point of if he can hold for long term horizon only, then stay in the stock, because some more fall can be witnessed in the stock. So until unless if the company don't post any sort of growth, we cannot see the stock rising from the present point of time. So wait, if only you can see further fall, and wait for a longer term horizon of 2 years or so.
Okay, let's pull up Tejas Networks, because we also need a long-term view on that. This question comes from Neeraj Chauhan. His question is it a good time to get into Tejas Networks right now at around 228? It's trading lower by 3.3% today. Astha, what is your advice on Tejas Networks?
Basically, if we talk about Tejas, entering at the present point of time is not advisable, because stock is already moving, I should say, near to its all-time low. So I think there must be something, and that's which is dragging the stock down. So wait for some more time. Don't enter into the stock right now. And 200 is a very attractive level, or 180, between 180 to 200, the stock is at the reasonable valuations also. So that will be a better entry point rather than at the present levels.
Okay, I don't know if Ashish, what are the levels that you're watching with regard to the Nifty? We've got an extremely short-term question. Bapi Kuri is asking whether you think the Nifty will close above the 10,800 mark. Seems, based on current levels, quite likely. But what do you have to say about that?
Yes, Nifty, yesterday we have recommended our clients to go ahead and buy Nifty. And our target for the Nifty is 10,860. So we are expecting the Nifty to close above 10,800 mark today, and our target would be 10,860 for the day.
Okay, Ashish, we have another question for you. This is a question from Mahesh Bhai Yagnik. He has shorted 10,000 shares of Make Money Organics in the grey market at 68 on November 22nd, and he has to cover these shares by December 5th. His question is when to cover. Considering he is shorted at 68, it's currently around 58, would you ask him to book profits? Would you ask him to trail stop losses until 5th December? How would you go about it?
Definitely, I would recommend him to book 50% profits as of now. And then for the rest of the 50% of the quantity, he should trail the profit. The next target which I can see on the chart, the first target is 53 rupees. And the second target on this particular counter would be 49 rupees. So as of now, it is facing a small support. Hence, I am recommending him to book profit in 50% of the quantity and trail the stop loss for rest of the 50%. First target would be 53 and second target would be 49.
Okay, Astha, I'm going to take this question forward. We also have Krish, and his question is, well, at what price should he average Make Money Organics? He has a 6-month view, but he's bought it at 65, and as we know, it's currently at around 58. Would you recommend him buying Make Money Organics at this rate, or avoid, if you would, at what levels?
Basically, I would like to say avoid Make Money Organics at present point of time, because financial performance is not great, and that's why the stock is not performing well. And again, as mid cap space as a whole is not looking good, and in that case, if a financial performance is not good, then we can expect more downfall in such sort of stocks, and that's why averaging is also not preferred at the present point of time. So my idea is that rather than averaging, if you try to exit from the stock, then it will be a better choice.
Okay, we've got an interesting and perhaps a little timely, question from Ramesh Kumar. He's saying that he's holding shares of both HUL and GSK Consumer, and those two companies, at least GSK Consumer, is in the news because Unilever has just come in, as a potential acquirer of GSK Consumer. He's asking what the implications for HUL are, and I understand. Agam, that this is Unilever acquiring, right. So there will not be, or there will be very limited impact on HUL. So but how does it work?
It's an interesting question, and Alex, we're going to have to wait for more details to come in. But as you have mentioned very rightly, investors have to know that it is not Hindustan Unilever, but its parent Unilever, which has made a bid for GSK's Indian consumer business. Now, what that means is there could be several scenarios, but among the several scenarios, what investors and analysts out there are talking about is the possibility of Unilever buying over GSK's consumer business, but there is also a chance that it could be two distinct listed entities where GSK's Horlicks and Boost business, while it may be owned by Unilever, it will be operated separately. That is one scenario. The second scenario is that while Horlicks and Boost will retain their brands, Hindustan Unilever and GSK's distribution channels may merge and they may be able to help each other. But for now, I would not speculate on anything at all because we honestly don't even know if Unilever is going to buy GSK because Nestle, it may be behind in the race, but it is very much in the race at this point in time. And we don't have any,
clarity
or any developments on that.
So as in now, rightly said, I mean, it's speculation at this point. What we can do is get a check from Astha. So Astha, we've got Ramesh Kumar, as I mentioned, holding both HUL and GSK Consumer. What does he do with that? Does he hold on to these investments? Does he add more?
Definitely for HUL, we are very positive, and as a disclaimer, I would like to suggest even we have a coverage on the stock. So for HUL, because this is the only FMCG company which have posted the growth of more than 20%, I should say. So very good growth apart from very strong margins on this space. And looking after the fundamentals of this company, HUL is a very good choice. 1850 is my target for the HUL, which I'm giving for the medium term. So definitely hold for HUL, and even in case of GSK also, the kind of financial performance this company has been posting, and in case the ongoing news about Horlicks and all, even if it happens, then also this company will be profiting going ahead. So altogether, my idea is hold both the stock for the medium term point of view, at least till the elections, because FMCG is a space which is a defensive at the time of election. So till the elections, hold both the stock, and the 10 to 15% upside can be witnessed in both the stocks.
Okay, let's pull up Repco Home Finance because that one is the one which is under pressure, and we have a bunch of queries here when it comes to the near-term movement, and it's at around 341. It's down another 4.7% today. Ashish, firstly, what is your view on Repco Home Finance? Is it towards the long or the short side? And secondly, if you were to go short, what is the risk-reward ratio? Or the third question would be, would you avoid taking any trade right now because you are still waiting for more variables to come through and clarity on them?
First of all, my view is bearish on this particular counter. But if I want to initiate a fresh trade, then I'll wait for one particular level to be taken off, and that level is around 328. Currently, it is trading at 340. People who have already gone short, they should trail the stop loss. People who want to take the fresh position, they should wait for 328 to be taken off. If this level is taken off, the next immediate target would be 314. And if 314 is taken off, then 300 will be the next target. So if I want to take a new trade below 328, and in that case, the stop loss should be 340. People who are already holding the short position, they should keep a stop loss at 351.
Come in on Repco Home because we also have Rahul Tiwari who wants a fundamental view, and his question is, can he start accumulating Repco Home Finance at current levels?
If the current level is not advisable right now, because already we are seeing HFCs, there is a pressure due to the high interest rates. So altogether, don't accumulate at the present point of time, rather than stay away from the space at least for 6 months horizon.
I think we have a time-sensitive question, so I'm going to take this up immediately. Ashish, just pull up BPCL. We're talking about Karthik's query. He has shorted BPCL at 328.5 for intraday. He's asking what your view is.
My view is sideways for this particular counter. If I look at the 1 hourly as well as 30-minute charts, I am expecting the stock to remain in a sideways movement. For today, the important level is 326. If the 326 level is taken off, then definitely the stock, the first target would be 319. So he has taken a short position, so I would recommend to hold, but there has to be a strict stop loss of 332.20.
All right, let's also take a look at Yes Bank right now because we have a question from Puneet Nanda. His question is, can you accumulate at current levels for the long term? Okay, we have a lot of long-term questions today.
It's come back actually.
Yes, it certainly has made a resurgence because at one point in time it was below 150. So I suspect there must be some opportunistic traders who must have bought into it. But we don't know if that is the right level to well, get in or get out for that matter. So I'm going to pose this question to our experts. Astha, first one, for you, Yes Bank, what is your view here? Would you start buying into the stock at this level, or would you wait for more clarity on several other fundamentals?
See, if you want a fundamental analysis, then every time when there is some sort of a problem in the stock, like right now we have seen consecutive 3 resignations were there from the directors of the company, I should say directors of the bank, and still there is no clarity on the part of management also. So my idea is, in such a case, don't enter into the stock, or even don't average or accumulate the stock at the present level, because you don't know when any other negative news can come. And even if we talk about the financial performance also, this time they have shown degrade. So as there is a problem in the management also, and the financial performance is not good, so better to stay away from the counter. Don't average or accumulate even at the present level, and one can switch to other good quality banks like HDFC Bank, ICICI Bank, or Axis Bank.
Okay, very quickly, Astha, we've got a question from Vignesh. He's asking for 3 mid-caps that you think are poised for growth, or huge growth rather, he says, in the next 5 years.
If we talk about, my first choice is the Excel Industries, as we have a coverage on the stock. So the stock is looking very good, and every part in the fundamental. If we talk about financial performance, a very strong financial performer with a very strong set of business. So Excel Industries is my first choice. Second choice, I would like to say Weber Global. This company is into the basically e-commerce. They have their news channel in the US and UK. So most of the sales are coming from their business, from US and UK operations. And the festive season is ahead due to the Christmas. We are expecting very strong sales on this counter also. So Weber Global is another mid-cap choice which I would like to say one can buy. And third one is the Shashasai paper or JK paper. Between these 2 paper, investor can choose anyone. So Excel Industries, Weber Global, and JK paper is my 3 mid-cap picks. But I would like to say one thing, that as this year is not looking good for the mid-cap as a whole, so there might be possibility that these stocks will not perform very high, or the run rate can be very slow. But for the longer term point of view, decent return of 20 to 30% can be expected in these 3 counters.
Okay, let's now go into the segment which is called Rapid Fire. We'll try and take as many questions as possible over the next 2 minutes. Experts, please keep your answers as short as possible. Ashish, this is on Everest Industry. We've got Krish asking for a technical view for the next 6 months.
Everest Industries, if he is hold on with a strict stop loss of 185 on a closing basis. If the stock goes above 210, then there will be a fresh breakout.
I believe there's a mistake here. I believe there's a mistake here. Everest Industries, from what I can see, trading around, can we pull up the chart again? Around 400 and? Let's pull up the chart again, please. Everest Industries currently trading around 470 from what I can say. Ashish.
Okay. Yeah. Just a minute. It is opening.
Okay.
Right,
we'll come back to that. We'll go to another.
All right, we'll come back to that. We have two questions on, Bosch. We have Sahir and Sahin who want a fundamental view on this one. So, Astha, Bosch India, this one is for you.
If we talk about Bosch India, Bosch Limited, I should say. So fundamental view is great. Only the problem is with the valuation. So my idea is hold the stock rather than buy.
Okay. Do we have a view, Ashish, on Everest?
Yes. Everest Industries, my view is hold on with a strict stop loss of 459. On the higher side, if the price goes above 485, then the first target would be 510.
Okay, the next one is a technical view on RBL Bank. Ashish, this one is for you. How are you seeing trade on RBL Bank? It's currently at 545.
Definitely hold from my side. Yesterday we have seen a carnage in this particular counter, but today it is again trying to come in a positive zone. So definitely hold with a strict stop loss of 532. On the higher side, the target would be 560 and 567.
Okay, would you recommend Astha getting into paper stocks as of now? They've actually done pretty well over the recent past.
Sure. And my choice is JK paper and Seshashai paper. If we talk about Seshashai paper, 1500 is the target. If we talk about JK paper, 210 is the target.
All right, and a final question
Sanofi India. Please take Sanofi.
Okay, Sanofi India. It is Sanofi India. Astha, this one is again for you. Fundamental view on Sanofi India.
MNC pharma company being very strong at present point of time, hold the stock, and possible target is 7,000 in the longer term horizon of 1 year or more.
Okay. Very quickly, Arvind Limited, would you have a technical view on that, Ashish?
Yes, definitely. If we look at Arvind Limited, I would recommend to exit. And if someone wants to go short, definitely someone can go short in this particular counter. Currently, it is trading at 103. The stop loss should be 105.5, and the first target within next 2 to 3 days would be 97.
Okay, guys, I really hate to do this, but we again run out of time on this show. So I'm going to take this moment to thank both our experts, Astha and Ashish, for helping our viewers with all their queries. But that's all that we have in this edition of Ask PQ.
Thanks so much for watching. This is Bloomberg Quint.